Welcome to the Deep Dive, where we cut through the noise and get straight to the insights. Today, we're diving headfirst into a question that's been sparking a lot of debate. Just how big can MicroStrategy, or MSTR, actually get? You might hear MSTR and think, oh, right, that software company that just bought a ton of Bitcoin. But our sources reveal something much deeper, a truly audacious financial strategy, maybe with turns that are far more surprising than you might expect.
That's absolutely right. This isn't merely a company holding a digital asset. It's really a fascinating case study in modern corporate finance. Today, we're taking a deep dive into MSTR's bold strategy, its unique valuation model, and, the potential paths for its future. What's truly compelling here is how MSTR isn't just a company. It's pioneered a completely new model of corporate finance, using its public structure to amass a digital asset on an industrial scale.
And to help us unpack all of this, we've pulled from a really diverse set of sources. We've got in-depth research reports from A-Invest and ExecEdge Research, lively and, frankly, often conflicting discussions directly from Reddit, and, of course, hard market data. Our mission is to extract the essential nuggets from all these perspectives to help you understand what's really going on with MSTR, and whether it's bold moves or truly innovative genius, or perhaps something a bit riskier in the long run. Okay, let's maybe start at the beginning. MSTR's core strategy. August 2020, they made this pivotal decision that completely reshaped their identity. They decided to convert a significant portion of their corporate treasury into Bitcoin. Can you set the stage for us on that big shift and, why they did it?
Yeah, this was a seismic shift, really. MSTR explicitly framed this decision as a strategic hedge against inflation. And they saw Bitcoin as a superior store of value compared to traditional cash. It fundamentally transformed their strategic identity from just a software company to what became effectively a Bitcoin treasury operation. This was pretty groundbreaking at the time for any publicly traded company. They weren't just buying Bitcoin, they were kind of betting the company's future on it as a primary treasury asset.
And the scale of that accumulation is just staggering. Was this a single massive purchase or more of a continuous strategy?
Oh, it was definitely continuous, very deliberate. By May 2025, MSTR had accumulated an incredible 580,250 Bitcoin. Think about that number for a second. It's huge. Like, they've gone all in on digital gold, one strategic purchase at a time.
Wow.
The aggregate purchase price for all of that was approximately $40.6 billion. And thanks to Bitcoin's performance, they're sitting on substantial unrealized gains, something like $21.9 billion.
That's an enormous amount of Bitcoin.
Yeah.
How did they actually finance such large-scale acquisitions? I imagine it wasn't just, spare cash flow from their software business.
No, it certainly wasn't, not nearly enough. This is where their disciplined and, frankly, quite innovative capital structure comes into play. They've leveraged a variety of methods to acquire that Bitcoin. A significant portion, $20.9 billion, came through direct equity offerings, so selling new shares to investors.
Okay, selling stock. Makes sense.
Exactly. But beyond that, they've also issued zero-coupon convertible notes.
Hold on. Zero-coupon convertible notes. That sounds a bit technical. Can you break that down for us? What does that actually mean?
Good question. Yeah, it sounds complex, but the idea is fairly straightforward. Zero coupon means they pay little to no interest, which is great for MSTR's cash flow. Convertible means the bondholders can, under certain conditions, convert that debt into MSTR stock at a predetermined price.
Okay. So bondholders are betting on the stock price going up.
Pretty much. It effectively gives MSTR capital now in exchange for potentially giving up a piece of its future equity upside later. It's like selling stock volatility. They also raised another $6.4 billion through other forms of debt and preferred stock sales. And their strategy includes a target long-term leverage ratio aiming for 20-30% of their Bitcoin asset value. It shows a very calculated approach, to financial engineering.
So if I'm an investor listening, why would I buy MSTR instead of just buying Bitcoin directly?
Yeah.
What's the unique appeal here? The middleman, essentially.
That's where MSTR's unique value proposition really shines. They've essentially transformed into a publicly traded Bitcoin proxy, or what some people call a synthetic ETF.
It's a synthetic ETF for Bitcoin. Okay.
Yeah. For many public market investors, think large institutions, pension funds, maybe even some individual investors, direct crypto ownership can be really challenging. You've got legal hurdles, operational complexities, compliance issues.
Custody taxes.
Yeah, exactly. MSTR offers a familiar, liquid, and regulated pathway. You buy MSTR stock, you get exposure to Bitcoin without dealing with wallets, exchanges, or those complex tax implications. It's basically Wall Street's answer to accessing Bitcoin without the crypto headaches. It fills a massive demand gap for investors like you.
Now let's talk about the elephant in the room that often comes up in our sources, especially on places like Reddit. It seems like every day I see at least one comment about how some people value the software business at like $0, or at least they say it's not really worth anything anymore. Is that fair? Is it truly irrelevant now that Bitcoin is the main focus?
This is where it gets really interesting, actually, and our Reddit sources offer some surprising counterpoints. While the common perception is that the software business is overshadowed, a deep dive into its architecture reveals a potential resurgence, especially with AI.
How so?
Well, one Reddit discussion highlighted a key difference: MSTR's schema layer architecture. It defines metrics globally across the whole system. This is fundamentally different from, say, Microsoft Power BI's workbook approach, where measures are defined individually within each workbook.
Okay, and why does that architectural difference matter so much for AI?
Because it makes AI integration significantly simpler for MicroStrategy, much simpler. With those global definitions, an AI can consistently understand and respond to user queries about data across the entire system. It knows what revenue means everywhere. This enables true user-facing AI, where end users can just ask questions about data directly and get reliable answers.
Right, instead of the AI getting confused by different definitions in different places.
Precisely. Power BI, conversely, has struggled to integrate that kind of customer-focused AI for this exact reason. Its fragmented approach makes it much harder for an AI to interpret data consistently.
That architectural advantage for AI sounds powerful. But practically speaking, MSTR software hasn't exactly been, dominating the market lately. Is this truly a game changer, or maybe more of a niche advantage that's being overhyped by some proponents? And what about cost? I've heard Power BI is often seen as easier to get started with.
You're right, Power BI can initially appear easier. It's got that familiar workbook-like feel. However, MSTR offers more of a full-service model. Things like embedded dashboards and certain data capacities are often included in the price. Power BI uses more of a pay-as-you-go model, which can get expensive quickly.
Yeah.
That embedded dashboard feature, for example, could cost $5,000 a month just to start.
Ouch. Okay.
And while MSTR does have a higher learning curve, one Reddit contributor estimated it's about double that of Power BI, that architectural advantage for AI, plus the bundled pricing. Well, it could certainly shift perceptions as AI becomes more central to business intelligence. It might not be dominating now, but it has a kind of secret weapon for the future.
So while Bitcoin is clearly the primary driver, the software side isn't just dead weight or an afterthought. It has a legitimate, maybe even potentially renewed purpose.
Exactly. And it's important to remember Michael Saylor's all-in Bitcoin strategy started before AI reached its current, transformative potential. The software business's free cash flow, while definitely not the main driver of MSTR's overall valuation anymore, it still powers multiple revenue streams, as one source put it, by allowing for that continual purchasing of Bitcoin. You can think of it like the foundational engine that keeps the main Bitcoin accumulation machine running smoothly.
Okay, now we have to talk about MSTR's valuation because it's caused quite a stir. This concept of an MNAV, that's market cap divided by the value of token holdings, right?
Correct. Market cap to net asset value, essentially focused on the crypto.
So as of May 31st, 2025, MSTR's market cap was around $101 billion, but its Bitcoin holdings were valued at about $61 billion. That gives us an MNAV of 1.66x. What does that premium actually mean, and how does it stack up against other companies doing similar things?
That 1.66x MNAV clearly indicates MSTR is trading at a significant premium to its underlying Bitcoin holdings. It costs more to buy $1 of Bitcoin through MSTR stock than buying Bitcoin directly. And to put that in context, other core strategy firms like Metaplanet in Japan are trading at a whopping 5.44x MNAV. BTCS is closer at 1.75x. So MSTR's premium exists, but it's not necessarily the highest out there.
Why the premium, though? Why are people paying more?
Several reasons are usually cited. First, shareholders benefit from what's called equity leverage on the token appreciation. Their equity stake amplifies the gains when Bitcoin rises more than just holding Bitcoin itself. Second, there's a scarcity premium. There just aren't that many publicly traded stocks offering this kind of direct liquid exposure to crypto. MSTR was the first big mover. And finally, there's speculative optionality. Investors assign value to the expectation of future token purchases and perhaps to Michael Saylor's track record and perceived market timing.
So this premium, this leverage, It raises a really provocative question that's all over our sources, from research reports to, again, those Reddit threads. Is this simply innovative financial engineering? Or is it, as some voices dramatically put it, something riskier, maybe bordering on a Ponzi scheme? This is where the debate gets highly contentious.
It's definitely a point of passion disagreement, yeah. Some sources, particularly critics, argue MSTR functions like a perpetual dilution machine. The concern is that new investors buying MSTR stock at that premium are essentially boosting the Bitcoin per share for existing holders
Wow.
because the newly raised capital is used to buy more Bitcoin.
So new money props up the value for old money, in a sense.
That's the argument. They say this model relies on a continuous inflow of new buyers willing to pay the premium. Some Reddit users also point to Saylor's charisma and, well, what they call his cult of personality as key drivers. Comparisons are even drawn, sometimes unfairly perhaps, to Saylor's prior accounting mistakes during the dot-com bust, suggesting a pattern of aggressive financial maneuvers.
And the big fear there.
The major fear is a crash. If Bitcoin crashes significantly, say back down to $18,000 or even lower, it could lead to what's called an unleveraging, meaning they might have to sell some of their Bitcoin hoard, possibly at fire sale prices, to meet debt obligations from those convertible notes, potentially triggering larger liquidations.
Okay, that's a very serious accusation. What's the counterargument? How do defenders of MSTR's model justify the premium and push back against these Ponzi concerns?
Well, those who refute the Ponzi label, and there are many, emphasize MSTR's complete transparency. They argue the strategy and finances are fully disclosed. Investors know exactly what they're buying. It's not some hidden scheme.
Full transparency, okay.
They also point out that MSTR weathered the last brutal crypto bear market, where Bitcoin dropped from nearly $70,000 down to $17,000, basically unscathed. That showed resilience. And crucially, they stressed that none of MSTR's Bitcoin holdings are encumbered or used as direct collateral in a way that would automatically force them to sell if prices drop below a certain level.
So no margin calls on the Bitcoin itself.
Right. That's a key point. Defenders argue MSTR is more like a closed-end fund trading at a premium, which happens all the time in traditional markets. And importantly, they say it provides valuable Bitcoin-backed bonds to the market, filling a unique niche for institutional investors looking for crypto-linked debt instruments.
So regardless of where you personally land on that very charged Ponzi debate, it seems clear there are inherent risks baked into this strategy.
Absolutely. Even the staunchest defenders acknowledge that MSTR is a high beta leveraged Bitcoin proxy. No question.
And high beta just means?
High beta means its stock price tends to swing much more wildly up and down than the broader market, like the S&P 500. It amplifies market movements. So yeah, MSTR comes with significant risks. There's the extreme price volatility of Bitcoin itself, obviously. There's the potential for future dilution if they keep selling stock to buy Bitcoin. And there's always regulatory risk changes that could affect crypto holdings or how they're accounted for. It's definitely not a set it and forget it investment. Not for the faint of heart.
Shifting gears just a bit, MSTR didn't just transform itself. It seems like it basically pioneered a whole new class of public companies, companies that treat crypto accumulation as the core of their capital strategy, not just, a side hedge like Tesla might have done for a while. How has that broader landscape evolved since MSTR made its first big move?
Yeah, that's a great point. By mid-2025, the landscape has really bifurcated, split into two main strategic groups, or cohorts. First, you have the pure Bitcoin accumulators, like MSTR itself. It remains the undisputed leader, holding, as we said, over 580,000 Bitcoin. But others are in the space too. There's Metaplanet, aiming to be Asia's premier Bitcoin Treasury vehicle. They're targeting 21,000 Bitcoin by 2026. And Cantor Equity Partners is another name. Their focus is purely on Bitcoin price appreciation. That's the game.
Oh, okay, Bitcoin accumulators. And the second group, what kind of crypto assets are they focused on?
The second group are the proof-of-stake validators. These are companies focusing on assets like Solana and Ethereum, which use a different consensus mechanism than Bitcoin's proof-of-work. Companies like DeFi Development Corp, or DFDV, they're the leading public market vehicle for Solana accumulation, holding over 609,000 SOL as of May 2025. You also have names like Upexi, SOL Strategies, and BTCS, which is more Ethereum-focused, holding around 12,500 ETH by May 2025.
And what's the key difference in strategy there? It's not just holding, right?
Right. Because these are proof-of-stake assets, these companies can stake their holdings. This means they participate in network security and validation, and in return, they generate staking yields. Typically, that's around 6–8% APR. Plus, they can earn validator income. This provides them with non-dilutive income streams cash flow that doesn't come from selling more stock. That's a key differentiator from the pure accumulation model of MSTR.
That's a critical distinction. So we're really talking about core strategy firms versus those with what one source called incidental allocation.
Precisely. Core strategy firms like MSTR, Metaplanet, DFDV, their valuation, their entire corporate identity, is primarily built around their crypto holdings and strategy. Incidental allocators, on the other hand, think Tesla when they held Bitcoin, or maybe Coinbase or a Block, they hold crypto, sure, but their valuation is overwhelmingly driven by their primary business models, whether that's electric vehicles, crypto exchanges, or payment processing. Their crypto holdings are a secondary, maybe tertiary aspect, not the core identity.
Looking ahead then, MSTR clearly isn't slowing down. What are their ambitious plans for the future? And maybe more broadly, what are the big macro forces that will truly determine how big MSTR and this entire sector of crypto treasury companies can actually get?
Well, MSTR's future vision remains quite bold. Our sources indicate they aim to potentially double their capital raise targets, maybe up to $84 billion, specifically to continue acquiring Bitcoin.
Wow, double down again.
Yeah, exactly. They also plan to maintain that long-term leverage ratio, 20-30% relative to their Bitcoin holdings. That seems key to their financial model. And interestingly, they're also exploring Bitcoin's layer 2 solutions, particularly the Lightning Network. The idea is to maybe enhance corporate applications of Bitcoin and help boost broader Bitcoin adoption. So it shows a longer-term commitment beyond just holding, maybe moving towards utility eventually.
And zooming out, what macro forces are really at play here? What's going to shape the success or failure of this whole asset class?
Several big forces will be decisive, I think.
Yep.
First and foremost, crypto market directionality. At the end of the day, that remains the dominant driver for how these stocks behave. If Bitcoin or Solana surge, these companies will likely follow. If they crash, well,
Gravity takes hold.
exactly. Second, capital cost and access will become increasingly vital, especially if interest rates stay higher or normalize, and as scrutiny on dilution potentially rises, companies with the most efficient capital raising strategies will have a distinct advantage. Third, regulatory clarity. This is huge, especially around staking rules and how companies have to account for crypto holdings. Clearer rules could catalyze massive institutional inflows, or unclear or restrictive rules could force major restructuring.
A double-edged sword there.
Definitely. And finally, we'll likely see new entrants. Other mid-cap firms, maybe even larger ones eventually, could adopt similar strategies, particularly in jurisdictions seen as more crypto-friendly, like Japan, maybe Canada or Switzerland, where regulatory frameworks might be maturing a bit faster or more favorably.
So this isn't just a niche tactic anymore. It's really evolving into a scalable strategy that positions these firms at a fascinating intersection of equity and digital assets, as one report put it.
That's right. They're offering investors a package deal, really. Potential NAV growth from the underlying crypto, maybe staking yield for the POS firms, and always that liquid market proxy exposure. And importantly, it's all wrapped in the familiar regulated structure of a public equity. It's definitely a new frontier in finance, pushing the boundaries of what a public company can be or what it can hold.
So to kind of bring it all together, MSTR's journey. It's quite something. From a, let's be honest, somewhat conventional software company to becoming this leading Bitcoin treasury vehicle. It really exemplifies a fundamental shift in how public companies can view and leverage their balance sheets in this digital age. It's a high-stakes game, no doubt, financial engineering, strategic positioning, all within this rapidly evolving digital asset landscape. It's a story of audacious bets and potentially enormous rewards or risks.
And I think understanding MSTR's strategy isn't just about understanding one single company. It really helps you, the listener, grasp a broader emerging trend in capital markets. It shows how traditional financial structures are adapting to, and in some cases, fully embracing cryptocurrencies. It's about more than just Bitcoin itself. It's about exploring new forms of value creation and offering new kinds of exposure for investors like you in a rapidly changing world.
What's really fascinating here is, if we connect this to the bigger picture, maybe a final thought for everyone listening, what does it ultimately mean for the very definition of a company when its core identity, its growth path, and its perceived market value become so tightly, almost inextricably, linked to the performance of a single, highly volatile digital asset like Bitcoin? It's a fundamental question that will continue to evolve as this new type of corporate strategy matures, and one we'll definitely keep watching.